If you're self-employed, a freelancer, or drive for Uber, and you drive to and from your clients and work and want to pay less in taxes, then this video is for you. Welcome back. And if you're new here, I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes. And I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the YouTube channel and turn on all notifications for more videos. And check out our blog site where we post every Monday, Wednesday, and Friday. Today, I'm breaking down how to track mileage for tax deduction, step by step, even if you're not a tax expert or a spreadsheet wizard. So let's get started. Let's take a look at why tracking mileage matters. The IRS lets you deduct 67 cents per mile for business driving. Got to check this, make sure that was updated for the year, but we're going off of based off of what the latest guidance was. So that means if you drive 5,000 miles to and from your client that's business related, that's a $33,350 deduction. So yeah, tracking your mileage equals saving real money. Let's review who is entitled to be able to take this mileage deduction. You're entitled to be able to take the mileage deduction if you are self-employed or a freelancer, a gig worker, so that means those that are driving for Uber, DoorDash, or Instacart, a real estate agent, a freelancer seeking clients, or anytime you're using your car for business. This isn't available for those that are W-2 employees unless you're not reimbursed. Employees usually can't take deductions only because it's usually built into their salary. So you have to really be able to either you're receiving a 1099 NEC or you're self-employed or you're some kind of gig worker in order to be able to take the mileage deduction. Now let's take a look at what business mileage actually counts. The type of business mileage that counts is trips to visit see clients, if you're running any kind of business errands, you're driving to networking events, or going to the post office or supply stores. Just remember, personal errands and commuting to a job is not deductible. So just because you're self-employed and say you have an office and you commute to your office, that does not count as mileage. Only going to see clients, if you're running a business errand, if you're driving to a networking event, or if you're going to the post office or supplies. So daily commutes and personal trips don't count, but anything that has to do with business does. Let's take a look at what the IRS wants you to track. So your mileage log, what you're going to want to include in it is the date of the mileage, where you went, why, what was the business purpose, your starting and ending mileage, or your total miles driven. You need to track it as you go, not guess at the end of the year. Mileage is one of two ways, either using some sort of app or tracking it manually. There's a bunch of apps out there that you can use like Stride, which is free, Mile IQ, Everlance, and even QuickBooks self-employed has an tracker as well for mileage. Now, if you're going to do it manually, you want to keep a logbook or a spreadsheet, or you can use Google Sheets or Excel. And you may want to take a photo of your odometer for backup. It may be best to take a photo of your odometer on January 1st and then take it again if you remember on December 31st. There's one of two ways you can take this deduction for the mileage. Either the standard or the actual expenses. Let's take a look at both. So, the first way is the standard mileage. You can just multiply the miles by the IRS's rate. This is usually the most easiest and standard way to take the mileage. It usually comes out for a better bang for your buck in most cases. It just depends. Or you can take the actual expenses, which means a little bit more tracking. So you got to track your gas, track the maintenance, track the repairs. Most people use the standard rate because it is easier, as I said earlier. Remember, record keeping is your best friend. You're going to want to keep and save these records. Let's take a look at some standard procedures. Remember, you're going to want to save your mileage log, any trips related with receipts if needed, your year-end odometer readings, and your business calendar to help you verify trips. The IRS recommends keeping them at least 3 years. Remember, tracking mileage is simple tax savings. Use a method that you'll be able to stick to and be consistent with, whether it's an app, notebook, or spreadsheet. Keep it consistent. Got questions about what counts? Drop them in the comments below. And come back next week to learn about annual business financial review tips.